We do have quite a bit on the agenda tonight, so.
I see.
All right, so we will call the meeting to order at 7:06. As of right now, the only director missing is Joel Dobbins, and we have, sorry. We have Glenn Ackermoff, Rachel Tucker, John Kerr, and sorry if I mispronounced that, John. I'm not sure. I've heard your last name pronounced. And Joel Haverling with staff. Moving on. Sun Valley Community Association has a land acknowledgement and an anti-racist statement supported by this board of directors. We direct you to the Sun Valley website and the Sun Valley official Facebook page where these full statements can be found. And so we'll move into the adoption of the agenda. Do I have a motion?
I move to adopt the agenda.
Second.
All those in favor? All right. So we have a consent agenda this meeting. Looks like Joel Dobbins just joined us for the record. For the consent agenda, I'll just approve by unanimous consent. So are there any objections to the consent agenda? Hearing none, that passes unanimously. So I'd like to do a quick introduction. I'd like to start off by thanking Brian Krulak, who served in multiple roles for us as the director of golf and interim general manager in the immediate wake of the termination of the prior GM. The board recently was able to bring in our newly appointed interim interim GM, Glenn Akromoff. With that, I would like to introduce Glenn as our new interim GM and welcome him to his first board meeting. The board has brought Glenn in to aid the board and the community in our transition to a new permanent GM. Glenn has a wealth of experience in leading organizations through these types of transitions, and the board is looking forward to working with Glenn. Thank you, Glenn, for agreeing to work with Sun Valley, and I turn the floor over to you if you'd like to say anything on your behalf.
Yes, I would. First of all, thank you, and it's an honor to join the Sun Valley team. Everyone's been really awesome as I've come in here and been real open. I know it sounds a little weird, but I think I'm pretty much up to speed. I'll find some of those hidden nuggets, I'm sure, soon, but overall, I feel like we're moving forward already. I'm halfway through my meetings with my staff, so and again, those have gone really well. And I definitely look forward to working with the board and staff in helping the organization improve in many, many ways. So again, thank you. And I look forward to continuing to move forward.
All right. Thank you, Glenn. Do we have any announcements?
Me.
Linda?
I still have one vacancy on the N&E committee that I'm hoping some member from the community would love to volunteer for.
Noel? You're on mute.
Technology. The ACC has 2 openings, and we are welcoming anybody that would like to join us. The description that has been sent out is a little foreboding and sounds a little intense, but we're really accepting anybody who has an interest in serving our community.
Any other announcements? All right, we have the auditor's presentation first up on our agenda today so that they can get rolling and then they can move on. So I'll turn the floor over to staff to get that rolling.
Hey, John, do you know, is the auditor waiting to pull in?
I don't see him at this time. It was Ben. What was his last name?
Ben Hancock.
Ben Hancock. Yep. Yeah, I do not see him in our attendees right now.
Okay, I'll send him a text.
Give him a minute here, maybe.
Okay, he should be coming on soon.
I like your Valentine's Day decorations, Joel. Those
Oh,
are really
thank you.
sweet.
Yes, it was all my idea, actually. No, it was Susie's idea.
Looks like he's in the attendees, John.
Yep, bringing him over right now. There you go, Ben. Looks like we've got you in the meeting now.
Hey everyone, are you ready for me?
Yeah, they're ready right now.
Okay, excellent. So I have a PowerPoint and I'm going to try to share my screen here. You guys see the PowerPoint?
Yeah.
Great. Okay, I'll get right to it here. So I'm Ben Hancock. I'm a senior manager at Larson Gross, and I led the audit for the 2019 Sudden Valley Community Association's financial statements. And so I am here to present the results of that audit to you all. And it was my first year working with Sudden Valley. In the past, when Larson Gross had done it at least a couple of years, it was led by Keaton Worson. He actually started the audit, but then he had baby number 4. So I was able to step in and kind of take it on. And so I appreciate working with you all. The other thing is, I wanted to mention that we did not do the 2018 audit. That was a different auditor. So we were, totally fresh look this year with myself being new to you, and then not having the prior audit that we had done at Larson Gross either. So I'd first like to just go over what an audit is. I present to a lot of boards, and a standard question is really, what do we do? So, so in regards to the audit, I'll try to kind of cover the highlights of what it's for and what we do. So your annual audit is required. Section 4 of your bylaws states that you need an annual audit by an independent CPA firm every year. It's also required by the Revised Code of Washington for any homeowners associations that have annual assessments over $50,000. An audit is also good governance. It's really part of the accountability to your constituents, which are the homeowners. And it's part of an overall healthy system of checks and balances. And just some misperceptions about audits is that they're not fraud investigations, although that's something CPA firms do as well. If there's suspicions about a fraud that happened, then CPA can come in and kind of figure out what potentially might have happened there. But this wasn't a fraud investigation. I mean, sometimes we do find fraud, but it's not something we're engaged to go try to find out. It's also not a guarantee that all numbers are right. We audit around a concept called materiality, where if you look at your balance sheet, you'll see that you have 17 million in assets. So, it's a pretty big number. Where if you look at, say, $500 being off compared to 17 million, it's what we'd say not material. So even though $500 may seem like a lot to you or I, from an audit perspective, based on your amount of assets or revenue per se, it's not a material amount. An audit is also not a review of all checks that were written throughout the year. We do review a pretty good number of checks, but not all checks. It's also not just a once-a-year checkup on your staff. And it's not a substitute for good day-to-day internal controls. Part of the audit is reviewing what type of internal controls you have. And the best example of that is, you don't want just one person to be able to, write a check, post it in the accounting system with no review. You want at least another person involved in that whole process. So there's at least 2, sometimes 3 sets of eyes on a transaction, and that mitigates the risk of fraud. So we go through the key processes to make sure that you have good controls in place. And as an audit firm, we are licensed by the states, and we're also regulated by federal and state government in the EICPA. So we also get audited. We have a third-party reviewer that comes in every couple of years and looks at some of our engagements to make sure we're doing appropriate work. We're also completely independent of audit clients. We're unbiased. We're totally non-political. And we have a responsibility to all readers of the financial statements. So that includes you as the board of directors. It also includes your finance committee, your soon-to-be audit committee, management in general, any regulatory bodies. And outcomes of a good audit is really to tell you whether your accounting/finance function is giving you good information. And it tells you how you could potentially improve your internal controls. But ultimately, it provides that big word there, assurance, in that your financial statements are a reasonable depiction of your financial situation. So I will be covering the 2019 fiscal year audit. And as part of that, we also provide what you call non-attest services. And in this case, it was assisting finance with drafting the financial statements. And ultimately, these are the community association's financial statements. They're not my statements. They're not your individual statements. They're the Sudden Valley Community Association statements. And I want to give some kudos to Joel, because Joel is a strong CPA and he really knows his stuff. He's been an auditor. He's worked internally at organizations and he understands financial statements. So Joel and I spent, a couple weeks going back and forth with him doing a detailed review just to make sure everything was correct. And so I appreciate Joel for really taking that ownership, which we don't see all the time from finance staff. Sometimes they can just say, oh yeah, just draft them up and send them and issue them. But Joel really owned the process. He wanted to make them as right as they could be. So I want to give kudos to Joel on that. We also prepared the Form 990 tax return, which pretty much any not-for-profit or homeowners association has to file. And you might not know, but the Form 990 is actually a public document. So you can go to a website like GuideStar and look up just about any homeowners association's Form 990. So we help prepare that. We also provide IT managed services. And that is where we have a separate team from myself that works with John Kyer to help John kind of where he needs it in terms of making sure antivirus packages get rolled out, backups are appropriately run, firewalls are monitored, any help desk services community association might need. So just want to make you all aware. And we issued 2 reports as part of the audit. And I think you probably have a packet that would have these included. And so I just kind of like to go through a few highlights on the financial statements. So if you do have a copy of those financials, I'd like you to open those. And go to the balance sheet. I just want to mention a few things that jumped out on the balance sheet and then the income statement as well. So on the balance sheet, the first thing you might notice is that, cash is a pretty big number. It's about 1.3 million of cash and cash equivalents. Then it's about 3.4 million of cash held in reserve. So the process is really where dues are deposited into an operating account. Then they're transferred to roads, mailbox fund, capital reserve holdings. They're basically transferred to the different spending that will need to be made that the money is earmarked for in order to keep your infrastructure current and operating. And then I also want to point you to this parcels and lots held for sale amount. And this is the area Y lots held for sale. So, as far as we can tell, they haven't been, permanently turned into green space or anything. So these are actually for sale. There are sales during the year. So the value goes up and down as they're sold. But I want you to also turn to the income statement, because there's a particular line item that has to do with lots held for sale. And it's called valuation adjustment on lots held for sale. And it's 115,663. So that wasn't actually something where cash moved. It's just an accounting entry to basically mark your lots held for sale to a market value. So again, no cash exchange hands, just an accounting entry. So I wanted to point that out. And then the other thing you'll see at the top of this kind of income statement, as I call it, is it's called the statement of revenues and expenses. So that's just the name that an income statement is called for a homeowners association. And the purpose of a homeowners association isn't to generate a profit, but instead to determine how much money can be put back into the organization. And I guess one other thing I'll point out here on the statement of revenues expenses is usually you'll see a comparative financial statement where you'll have 2 years. So in our case, we'd have the 2019 year in one column and the 2018 year in the other column. So you're probably wondering, okay, why is there only one column? Well, as I mentioned at the start, we didn't do the prior year audit. And when you're doing a basically initial audit and the financials were audited in the prior year, you request access to the prior auditor's work papers so you can determine that they did adequate work to issue an opinion on the financial statements. So the way it usually works is we review those work papers of the prior auditor, we determine they did adequate work, and then we can rely on those numbers. So when that happens, you can put in a prior year column in your financial statements. We were unable to rely on the prior auditor's work papers because we were not given access to review them. We requested it, and what we were told was there might have been a miscommunication with the shredding company or something, but they weren't available. So because of that, we had to perform what's called a beginning balance sheet audit. So we basically performed 2 audits in order to issue the 2019 financial statements. Because without the reliance on the prior audit that was issued, we had to do it ourselves essentially. So with that, you only are able to present 1 year. So the good thing is next year, you'll be able to see the 2 separate years in your financials, be able to do a comparative analysis to see which balances fluctuated year over year. But with that said, I do want to talk about just a couple of fluctuations year over year. You'll see total revenues was about 6.55 million. In the prior year, it was 4.5 million. So revenue went up about $2 million year over year. And about 1.7 million of that was from dues and assessments. There's about 1.2 million in the capital fund, and then about 385,000 in recreation. Those are kind of the lion's share of it. And then if you look down at expenses, you'll see those are overall 4.8 million. The prior year expenses were about 4.3 million. So there was about 500,000 or so increase in expenses, which is expected kind of with cost of living and everything. And then you'll see down at the very bottom is this excess of revenues over expenses of about 1.7 million. So that was increased from about 220,000 in the prior year. So pretty good jump year over year, again, because of the dues and assessments, which of course would go back into the different areas that they're earmarked for. So that's really kind of the highlights, just some things that jumped out at me that I wanted to relay to you as part of the financial statements. And again, this is, our opinion says these are, materially correct. So in our opinion paragraph, we say the financial statements referred to above present fairly in all material respects the financial position. And this is known as a clean or an unmodified opinion or unqualified opinion, which is what you want. So we feel really good about the financials. It's a clean set of financials. You're in a great position going forward. And then just a heads up for next year, there will be one accounting standard that will need to be adopted. It's in regards to revenue recognition. And this is something that's been out for 6-7 years now, and it kept getting delayed. Well, 2020 will be the year that it's adopted for Sudden Valley. Although I don't expect it to have much of an impact. There's not a whole lot of things that would change for a homeowners association, although we will have to go through the analysis of figuring out what could potentially change there. So that's my presentation on the financial statements. There's another document that we issued. It's called a management letter. So I think you probably have that in your packet as well, also known as the post-audit governance communication letter. And this is just our required communications that we need to communicate to you as the board. And it just talks about the fact that we did our audit in accordance with professional standards. It defines the relationship between the auditor and management, i.e. we're independent of management in the association. Talks about any unusual transactions, which there really weren't any. Talks about the major accounting estimates. Also has a summary of some audit adjustments. You'll see in a table at the back of the letter, most of which were actually provided by management throughout the process of doing the audit. And I'm pleased to report there were no material weaknesses or significant deficiencies in internal controls. So you do have a good system of internal controls. The finance department is structured well. So that's really exactly what you want there. And that's my prepared presentation. So with that, I'll leave it open. Any questions?
I've got a couple of questions for you, Ben.
Sure.
My name's Linda Bradley. So on the balance sheet, at the very bottom, there's the members' equity. And there's the first three numbers. That's donated capital by developers, paid in capital by members, and the special assessment. Those numbers don't seem to change. It's like they remain constant from year to year. Do you know why?
Joel, do you want to take a shot at that?
Well, for example, like this donated capital, paid in capital, this sorts of things, that's, you could think about as kind of like your initial kind of equity going into the place, almost kind of like par value of stock, kind of in a sense, meaning like the initial equity that came into the organization. Then the amounts you'll really see fluctuating will be your equity reserves and the retained earnings amount. Those are what will capture like year to year your income type adjustments going on.
It's just, I really noticed that, and I've just never asked, and because I went back and looked at last year's, because there weren't comparative years. The other question I have for Ben, and maybe he can explain this to me, is we used to have a note. It was, and it varies, but it's usually in where you talk about the loan payable, you go into descriptions, and then future major repairs and replacements, that sort of thing. There used to be a thing that was called parcels and lots held for sale, and there was a summary there. And I see that we did have you pointed out, in fact, the value of the lots that were held. We did have some sales. And you've even got a correcting entry in the amendments. And I wondered why we were missing that particular note that was called parcels and lots held for sale.
I can answer that, Ben, if you want me to. So basically, Linda, what that note is, in a sense, the remaining lots that we have at Area Y doesn't rise to the materiality level to have to put that note on there, to break it out in that manner.
Yeah. Overall, parcels and lots held for sale are 178,000. Again, like it's a $17 million in assets balance sheet. So from a footnote perspective, we're not required to include something that small. If it's something that the board or your readers of the financial statements think is appropriate, i.e., qualitative factors, justify it being in the footnotes, we could certainly include it, going forward.
No, I just was curious why that there's all that reference to it, and yet that the note regarding it was missing. That's my question.
Yeah, really good question.
I just, and like I say, I wouldn't have noticed about that whole thing about the three different, the equity part of it. I've never noticed that before. There's the constant, and I started looking back at a couple of years. I'm like, wait a minute, these numbers don't change.
Yeah.
So that's why I asked, but those were my questions. Thank you.
Yeah, like Linda, just like what I said, with the kind of those equity numbers that aren't changing, you could just think of that as like your beginning equity, like for the association. So, and then the bottom numbers will capture your year-to-year changes over time, like from capital income and operating income. Gotcha.
I just, like I say, if I wouldn't have gone back and looked back a few years, because like a lot of the audited financials, I've never noticed it before.
Yeah,
sure.
And heaven knows I've looked at them. So it's just, I thought, look, I'm going to find out what's going on here.
Yeah.
Yeah. And I don't know if it helps, but kind of a way to think of equity is, it's your assets minus your liabilities is your equity. So if you take everything, all the assets, all the cash, all the parcels, property, equipment, everything of Sudden Valley Community Association, and you take away the amounts that are owed to third parties or like these refundable deposits, what you have left is your equity. So in this case, it's 14.7 roughly million.
Yeah, I see
That's
that.
it's kind of your cushion, kind of what you're worth.
Like I say, thank you for the explanation.
Do you have any other questions for Ben?
Bye.
Or I can't see everyone, so just speak up if you got a question.
I have a quick question. I'm just getting sort of up to speed on all of these financial matters and such. But I just wanted to ask, a former auditor said that he felt that we were overcapitalized, and I don't know if you could comment on that. I believe he may have been referring to the 12 million and that's reflected in the balance sheet there, the property and equipment, perhaps.
I think Brian, possibly, I didn't see what he said, but looking at his past management comments and stuff, and I touched on this last week when we did this auditor presentation for the finance committee. But I think
right. I'm sorry, I missed that.
Oh, sure, yeah. But I think possibly what he was getting at would be us depreciating the roads, because I know he did make a comment about whether or not we should or whether or not we should depreciate the roads. Meaning, what that means is, like, just give you a quick example. Like, let's say we spent $1 million on roads to repave all the roads, and then we would put it on the balance sheet, and it would show up in that property and equipment section. And then if we gave it a useful life of, say, like, well, I'll just make it up, 10 years. It's not 10 years, it's more than that, but 10 years, then each year we'll expense $100,000 of that asset. And then what he was getting at was, well, instead of doing that, why don't you just expense the whole thing up front? And like I've touched on before, depreciating roads is a very routine thing that cities do, counties do. That's nothing unusual. And there's nothing in the accounting standard that says you can't depreciate something if you can't sell it, like for profit, which is what he was getting at. If it provides us useful economic benefit, then we can depreciate it like cities and counties do.
Joel, is that is he
you.
recommending the accrual method? Is that accrual when you take it out in that manner?
No, it would just be actually, because what we do is the accrual method, but basically it's called, like, not capitalizing it. Like when you hear the term capitalizing something, that means you put it on the balance sheet and then just depreciate it over time. So he was kind of insinuating maybe we should just expense it up front, not capitalize it.
Okay, gotcha. Thank you.
Yeah.
Does that help, Brian?
Yeah, thank you, Joel. Appreciate it. Thanks.
Yeah.
Thanks, Ben.
Anybody else have any questions?
I have a question. Joel, was he recommending that for more than roads? We're using that just as an example.
I think, if I recall, he was specifically talking about roads.
Okay.
I think it might have been roads.
Could he have been talking about something else, though, I wonder? Like, is there subjectivity at all in the property valuation?
Well, the thing is, like, the thing that's going to affect that property and equipment will be whether you capitalize something or just flat out expense it immediately, like what he was talking about with the roads thing. So if we expense roads immediately, then that property and equipment line item would really fall. I forgot what exact footnote it is, but what the number of it is, but there's a footnote that classifies each one of those, whether it's, roads or buildings and so on.
Yeah, I have to dig into all that. So thanks, Joel. We can get into that later, but I appreciate it, guys. Thank you.
Yeah.
All right, any other questions? All right, well, I'd like to thank Ben for taking the time to present to both Finance Committee and the board. We appreciate it.
Thank you, Ben.
Yeah, thanks, AJ. Thanks, everyone. Yeah, hope you all learned something from my presentation.
Thanks, Ben.
Always open for questions. So appreciate your time this evening.
Thank you.
Thanks, Ben.
Thanks, Ben.
And Joel has the presentation slides from tonight if people want them, so we can send those to the board.
Yeah, Joel, feel free to send along to whoever would like a copy.
Yeah. Tomorrow I'll just send it to the board also, the slides.
Great. Okay.
All right. Thank
Enjoy the rest of the meeting. Thank you.
Thank you.
All right, we will move forward into property owner comments. We got John here still.
Yeah, he's here.
Yep, I'm here. All right. So we're going into property owners' comments. I'm sorry.
Yep.
Must have.
We got one at the beginning and end is what we'll do for our regular meetings.
Gotcha. All right. So anybody who has come here and is in our attendees group, you're welcome to raise your hand virtually. There's a little raise hand feature in Zoom, typically at the bottom of the screen. And we can bring you over if you've got something that you'd like to address the board with. About 15 people in attendance tonight. No takers at this time, it seems.
In that way. So we can keep moving on then, and I'll pass it over to Glenn then for the general manager's report. Thank you, John.
Thank you. There's just a couple of quick things I want to put out there, and then I'll answer any questions that you have. I did put in the report about the recreation manager recruitment, and I wanted to kind of highlight we've done 4 interviews this week, and the aggressive approach that I talked about is we have used the WRPA, which is Washington Recreation and Parks Association. So that's where we'll find a lot of recreation people. That's where they look for jobs. So we've done that. And then I used some of my contacts in Parks and Recreation throughout the state, sent a bunch of them out. If we don't find it in those 4, we hope for a number of applications. I did hear that particularly in the Everett, Marysville area, there's a lot of recreation people on furlough because they haven't brought them back. So we expect to get a good candidate, and we will wait until we get that excellent candidate that we're looking for. We also are going to, we have begun planning for the recreation reopen. We're just starting that planning effort. As you may have seen today, the governor began to outline the reopening plan. Some areas have already qualified to go to phase 2. So I don't think we're in that, but we're going to be not too far behind, I think. So we'll have that plan, and we will look to present that here on February 11th and get your input and approval, and then look to move forward from there. I want to give a quick highlight on some of the staff duties for the public too, because we've had a couple of folks leave. So for everybody's benefit, Jacob Close has taken on Bruce Bishop's duties. So anyone who has maintenance issues, please contact Jacob Close. Also, the security and emergency management duties that were part of that have come to me. So if you have those concerns, please come through me. And then I wanted to, AJ and I have talked already about updating the agenda process for the meetings and pushing the release back the release of the agenda and packet back a little bit. So we're gonna move it back on the 11th to Monday rather than the Tuesday. And then on the 11th, we will present an option to revamp that entire process to you for your consideration. Oryx and I will present that. We've been working on that since my first day, so we're moving pretty good with that. And then the last thing is well, I got two more things. One is I'm working on catching up with all of you and doing one-on-one meetings just to kind of get your perspective and get to know you a little bit and have you get to know me a little. And then the last thing is one of the things in the agenda process that I'd like to redo is the manager's report. It reads a lot like an annual report, and I'd like to make it a little shorter, a little more readable. So I will present that on the 11th, but I just wanted to give you a heads up. I was looking at doing that. Other than that, I'm open for questions.
Kim?
I just have a resource to offer Glenn and Rachel. I have a diversity job board that I can place your
Excellent.
whatever job you want. And I have a list that goes out to diverse communities and college graduates in Washington State. And I can offer that for the association.
That would be great. We would love to use that, and we'd love to put the rec on it right now if we could. So Rachel will get with you on that.
Yep.
Linda?
Couple of questions for Glenn. There's a note here about there's going to be a snow service request form that's going to be available for members. I just wondered where that's located at.
It's on the website, and I think when we did the snow, I don't think we pulled it off, but we were supposed to put it on the front page, and I'll have to yield to John to make sure we did. And then it was supposed to be moved to Facebook as well, so they could access it via Facebook. So, and we will, every time we've got snow, we will make sure it's highlighted so that folks can see it.
Yeah, because I know a lot of times, definitely people go, where are they? Why aren't they on my street?
Right.
So it's a really good, it's an excellent idea. The other question, I just had a couple, but they have to do with the rec department. So if you need to get back with me, that's cool.
Okay.
One of the things that's in here is about subletting Canadian wet slips to waitlist residents. And I wondered if there's a timeline when we might start doing that.
Okay. I will definitely need to get back with you on that, but we will.
Okay.
Soon.
Then the other thing I wondered about, and I've been asking everybody, down in Area Z, we used to keep all of our campers, trailers, and everything behind the fence down there in Area Z. And I noticed that there's a whole line of basically large, and I haven't gone down in there because I don't have any reason to go way down in there, of vehicles that are along the creek down there parked. Are those just temporarily parked? Because it mentions in here that the Area Z revamp project has been delayed until June. And I didn't know if we've moved those things there permanently because they're outside of the fencing that's down there.
No,
you may have to get back to me on that.
That one I've looked at. I haven't been on site, and I go down there tomorrow. But yeah, the site, and I've seen pictures of it. Some of the site isn't. When they stop the process, you can't move the stuff back in there. So they're just temporary until we finish the project.
I was concerned because I know the maintenance building sits really close to the creek down there. And I think because that's a tributary to Lake Whatcom, they only can be so close to that creek to have any sort of vehicles or anything like that parked. That's the only reason I'm concerned about that.
No, I'll take a look tomorrow, and if we need to, we're violating that, or if I even think we're close, we'll do something else. So thank you for bringing it to my attention.
And the only last thing, and this is HR, so it might be Rachel, and then if you decide to redo some of this because it's such a long report sort of thing, we have FTEs and we have the payroll breakdown. We used to always have a chart that just simply showed the number of employees per month, and that way you could see year to date, what did it look like last year in November and this year in November, and you got to see kind of the bell curve of hiring and how we go into our, full months when we take on CVC, and we also ramp up in golf and that sort of thing. And I don't know if that's going to be part of it or not, but I guess we'll wait and see what comes forward next month.
Okay. And it certainly can be.
I can put it back in, Linda. If everyone finds that helpful, I'll put that back in there.
It's just kind of nice because it's a really good bell curve to show exactly how many people are on staff. That's all.
Sure, no problem. I'll be happy to put it back.
Okay, thank you.
You're welcome.
That's all I got.
Any other questions for Glenn? Effie?
How's it going, Glenn? Are you feeling comfortable and enjoying your adventure here in Bellingham?
Yeah, I very much enjoy it. It's going really well. Everyone's been fantastic.
Okay.
And, I couldn't.
Okay, good.
For first week, it couldn't be better.
Okay, good. That's good to hear. Thank you. Thanks for coming and helping us.
All right, any other questions? All right, we can move on to the treasurer's report.
You want me to just take it? Yeah.
Yes, I was just gonna flip the microphone over to you, Mr. Joel.
Okay. Yeah, I think this time I'll share my screen. Kim didn't want me to do this in the past, but I finally talked her into allowing me to share the screen. So you're going to see, Kim, this is going to be a lot better, Now, let's see if I can.
Now you got to deliver.
He tried it at last week's finance committee meeting and it was fabulous. So
Yeah, I have no doubt.
Yeah, and I told Kim it would turn out like that.
yeah.
Kim's the one who wanted me to do this, and then she was signing checks last week, and then I was talking to her about it, and then I said, why did I just do that before? I should have. So I'm glad she suggested that. It's a good idea.
New blood, fresh ideas. That's what a new board's all about, Joel.
So Kim takes all the credit for this, not me. Can you see the balance sheet, the screen? Okay, good. So I'm on page 35. If you see page numbers on this one, just forget it. This is the teacher's edition right here. But so page 35, we're looking at the balance sheet. Ben just got through presenting the other balance sheet, which you have in your packets. So this number, or this column right here, now says audited December 31, 2019. So now, just to warn you, now I pointed this out back during the finance committee, but just in case, like someone wanted to look to see, well, let's look at serve cash and compare it to the audited balance sheet. These numbers will look a little different, and that's because the presentation that I'm using here is a little more conservative when it comes to cash. What I mean by that is you'll see this accounts payable amount here, this 187,901. Now, if you looked at the audited balance sheet, you're going to see a different number. It'll say like 400 and some thousand bucks. And that's because I intentionally took the AP that's solely related to capital and already reduced these cash accounts right here. So it's like, it's already assuming the cash is spent in a sense, but it's just, all it is just different. It's the same numbers as the audited statements, just put in little different buckets. That's it. So if you added up all the liabilities and assets and equity, you come out with the same amount, basically. But it's just, this is how we presented our balance sheet in the past, so I've just kept with that methodology for here. So, so like this net operating assets amount right here, obviously this is the most important number in terms of, we want this to be a positive number, which it is, which it's a nice positive number. If it weren't, then that means we're basically eating into, like prepaid dues and assessments and things like that. We also have this, right here, this PPP loan liability, which I pointed out in all the other months since May, basically. And that 357,700, there's the liability portion of it, the asset portion of it, the cash is sitting up inside this number up here as well. And then the balance sheet just, shows all the different capital cash accounts that we have here. So if you're ever wondering, how much do we have in cash for SURF and roads and mailbox, so on and so forth, you would look under the capital section here. Here's the capital assets or fixed assets here, lots held for sale. SURF loan liability. Okay, so these are the November statements. So keep in mind the board instructed me, they voted, to pay the surplus from last year was approximately 104 or 5,000, somewhere around that amount. So that was paid back in December. So you'll see this balance dropping by that amount on the December statement. So that loan amount has been paid down as instructed by the board. And then here's your liability amounts here. Excuse me, your equity amounts down in here. So this right here, of course, will tie right out to the balance sheet on the audited statements for the 2019 balances. Now going on to, so if we go to probably, the most important document for us, which is going to be page 36 in your packet. Now we're looking at the income statement or revenues expenses statement, basically. And this first column that you see here is, so this is actual, and the column to the right of this column here is budgeted, meaning operations. This is basically telling you were we better or worse to budget and by how much. So this is the difference. Like for example, total revenues better than budget by 27,854 for the month for November. So that's how you read that. So in terms of last month when I was giving these financial statements, I was giving at the time the best available numbers that I had, that I could look at it back then when I was trying to come up with, what I thought November would look like back when I was doing the October statements. And I gave a number of around somewhere between, I don't know, it was like 2,500, 3,000, that range. So we actually came out pretty close. So we had a net income loss, 9,735. Now, November, we're budgeted to lose money in November. So you see, we are actually better than budget by net income by almost $14,000 for the month of November, because November is just budgeted for us to get a loss. Same with October, same with December at this point in the year. Just because non-dues revenue is, drops around this time, primarily, which affects that, and just with expenses as well. So that's why we budget a loss in, this last quarter of the year, basically, for every single one of the months. Now, in terms of I could just give you some quick comparisons. So total expenses worse than budget by close to 14,000 only for expenses. Last year, November 2019, we were worse than budget by about 84,000. So we've improved in terms of only looking at November. In terms of we were better than budget by about 14,000 month to date. Net income wise, last year, November 2019, we were worse than budget for the month by 58,000. So that's good. Net income last year, we were actually $147,551 net loss versus the 9,735. And sometimes this can be a component too of when expenses hit. So like, for example, last year we had 3 payrolls in November. This year we only had 2. We had 3 payrolls in October last month versus 2 in October of 2019. So those sorts of things can affect those numbers. So at this point, it's most useful to look at the year-to-date numbers, which is, it'll be this column right here, basically all these numbers. actuals better or worse than budget here. And then this far right column is capital reserves. But these are the columns which, these two columns which affect our operations, the real budgeted numbers that everyone votes on for the operating portion of the dues. And so net income, close to $66,000 year to date net income. I'll get into the collection rates too here in just a second. We're still better than budget for the year by about 8,300. Now, last year at this time, we had a net income of about $286,000. So you're seeing, mainly what you're really seeing here is the effect of waiving April's dues, approximately 200,000 worth of it. So then last year we were better than budget by 249,000. So if we didn't waive those dues, maybe we could tack another 200,000 onto this number right here, in terms of like, if you wanted to think about it on a comparison basis. Now, every month I always talk about like our expense to revenue ratio, which only means for every dollar of expenses, how much do we take in revenues, or vice versa. If you want to think about it, if we had a dollar of revenues and we had 90 cents of expenditures, then our expense to revenue ratio would be 90%. So a lower number is always better. This month we have 98% expense to revenue ratio. In October is 97.5%, so we've gotten a little worse. Last year is 91.8%, so we would expect that to be higher last year because of the net income. Now, in terms of collection rates, so our collection rate at the end of November, year to date, was 94.9%. Let's see, in October, it was year to date 94.5%. So it's ticked up a little at the end of November. Month to date for November, it was 98.1%. So in October, it was 94.9%, then it ticked up to 98.1% collection-wise month to date. Now, I've already calculated the numbers for December, so I know where we're at year to date. So year to date collection-wise, year to date, at the end of December, it went up to 95.1%. So month to date, it was 97.8% for December. So at least that's encouraging that at the end of December, we cleared the year at 95.1% collection rate. And we're budgeted, the budget was 92%, which is what we budgeted in terms of collection rate for 2020. So we beat that, by 3.1%, 95.1% we finished out in. So I'll turn the page here. Oh. We'll take a little break from income just for a second, because now this is what you're looking at right here, which is page 37 in your packet. This is basically it's just your reserve cash sheet. You could think about it like that. Your cash balances, this is where the bottom or the top number is, this is where we were at 12/31/2019. These will tie right out to the balance sheet right in here in terms of like these numbers. And then this cash 11/30/20, these will tie to the balance sheet as well in here. So like the cash in the end of November 2020. And then in between is what triggered the changes. So dues received, this column, transfer fees coming in, stormwater mitigation fees, investment income, so on and so forth. And then just expenditures right here, meaning capital expenditures and stuff like that, payments going out the door. And then in this last section, this is just what we expect to see possibly coming in for the remainder of the year. Now, the biggest numbers that will affect this will be obligated expenses. And this just comes from, okay, good, I have this up. So this is a snapshot of like a SURF, basically a capital expenditure spreadsheet. All it is just all the approved projects that the board has approved. And this column here is just what the budget was, how much we've actually been invoiced, and then basically what we have left to spend according to the budget. Now this one was as of about December is what this was. So this is more current. So 225,262. If I were to make December's cash spreadsheet right here, then I would plug that number in right here. So that just means I'm going to drop the cash by what the board has approved, that they're on basically what the agency's on the hook for to possibly pay out. Then you have this board recommended carryover balance. 600,000 for surf, and then that gives you what you could be looking at cash-wise at the end of December. But that's if everything was actually paid for on those approved capital projects. All of these balances are basically up from November 2019, but this sheet really is just a function of how much money has come in from dues, how much the board has approved to be spent, and then that's how much you're looking at that you could use to spend, like going forward. Going back to the revenues and expenses, we're looking at, so basically I'm looking at page 38 in your packet. Now these numbers will tie right back out to that income statement that you saw, that second page that I went to, in terms of like, here's that loss, 9,735 for the month, and then there's the budget, better than the budget by close to 14,000. But the good thing about this page is this breaks it down by department. So now you can see by department how departments are doing. Starts off actual revenue, this column, this is just revenue better than worse, better or worse than budget. And then this column is the salaries and benefits, just how it is doing to budget, and then actual other expenses. And then this column, salary, benefits, other expenses equal the total expenses for the department. And then you have net income loss, then better, how did the department do for the month, better, worse than budget. So with here, I always talk about golf, since golf is basically our biggest operation, biggest revenue generator coming in from like non-dues revenue. And in terms of, so right here, you'll see golf turned in close to $36,000 revenue for the month. Last year at the end of November 2019, they had 25,066. That's an increase of about 10,600. Expenditure-wise for golf, which is this number and this number added together, they had 60,369 in expenses. Last year they had close to 88,000, so they're lower expenditure-wise by approximately 27,000 for the year. But keep in mind also, this is November, what we're looking at here. And last year they had 3 payrolls in November 2019. Here they only had 2 payrolls, so we would expect the expenditures to be less in this month versus last year at this time. So they had net income loss 24,680, net loss of 24,683 for the month, better than budget by about 11,500. Last year they had net loss of 63,000 right here, which means they're better than budget net income wise by about 38,000. Or their net income is higher by 38,000, excuse me, compared to last year's. But at this deep into the year, the most important sheet to really look at is you're looking at the exact same thing here, current month. And now we get to see the department's year to date, so January through November. So now this smooths out what was different from one month to the next. So now you're really looking at a little more, you're looking at clearly more apples to apples for the whole year through November 2020 at this point, and then I'll tell you what it is 2019. Now you'll see better, worse in terms of budgeted amounts. The only one that really jumps out would be this one right here, the maintenance department. Worse than budget by about $116,000. Now, I pointed this out before in prior months. The lion's share of this is going to be last year when we had all that snow removal and stuff. That was about 96,000 or so, 96,000. And we transferred, the board elected to spend that money out of UDR. This year, they did not elect to do that. So maintenance, in a sense, is shouldering all the weather and stuff like that by itself instead of UDR helping it out. So that's the lion's share of what's triggering this difference compared to budget. Now, in terms of golf right here, so golf, approximately $900,000 in revenue year to date. Last year, they had 883,731 in revenue, so better than last year by about 19,000 bucks, which is pretty good given the fact that golf was shut down for, what was it, 4 or 5 weeks or something like that back around March during the because of the pandemic. Total expenditures, salaries and benefits, other expenses. So total expenses for golf this year, approximately 791,000. Last year they had 42,000. So their expenditures are less by almost 51,000, 2020 compared to 2019. Their net income loss for the year, 112,000 approximately, better than budget by about 123,000. Last year, they had about $42,000 in net income at the end of November, so they're better than last year by about $70,000. And but those would be basically the big highlights of the financial statements at this point. If anyone had any questions on those. Linda, you don't have any questions, that's good, so we'll go on.
Oh, yes, I do.
I'm just kidding.
I know you were. I'm gonna pick on you first on page 35 with this whole thing of the capital accounts and where you've matched up everything but SURF and roads. 2019, I don't know why you would change what the auditor did. That's money that's done out the door. And if it is the audited financials, that should be what it reflects. The actual change in you lowering those two amounts for SURF and roads is actually $228,544.
Yeah, that's right.
Absolutely. And I'm saying you're carrying that as a starting balance forward into 2020. And that's what's going to, and it affects that bottom line of what's available after all is said and done and the carryover is taken and stuff. I kind of went back a couple of years and looked and stuff. Normally those numbers match.
Oh, well,
what the auditor has put in there.
Yeah.
And it's kind of unnerving to see just those two changed, but everything else remains the same. And
yeah.
I also,
sorry.
you can maybe answer this because it's all in this one section. What are member receivables capital? Why is the 16,503 just hanging out there? Wouldn't that go in one of those accounts that's already there to be distributed to? I just don't understand where it's out there and where do we keep track of that?
Okay, yeah. Lucky for you, I have a perfect response to both of those questions. With this right here, Linda, like the SERP stuff, and let's see, hopefully I have, yeah, okay, good. So here are the audited numbers right here, like just exactly like what you pointed out.
Yep.
1.2 million approximately, 1.1 million. And this difference, okay, where is it? Here it is. The accounts payable, and okay, so here's the AP for the whole agency on the audit statements, approximately 499,000, And then, so basically just kind of give a little background story of what Linda is saying. Here's the AP listed on our balance sheet, 188,000 right here, which is up in operations. Now the difference between those two is the exact difference between these cash balances that Linda's talking about. And basically why it would be, so what I've done is instead of, this is knocked down to 188 only for the operating portion of AP. And then whatever AP we had at the end of December has been netted against these cash amounts, meaning assuming, well, these cash amounts are already, they're out the door in a sense. These invoices are queued up to be paid out, like checks are being cut and will be out the door in January, the first week of January, actually. So that's why AP got netted against these balances. Now, why, when you look back.
AP is operational. And I'm talking about capital accounts, and that's why I don't understand how you offset those, or at least that's what you're telling me here.
See, what I'm saying is AP is not just operational. AP is, you have AP that relates to operations and you have AP that relates to capital expenditures also. Instead of showing AP down here, it's just netted against these cash balances to drop the cash balances. It's quite frankly just a more conservative way to show it. Now there's nothing wrong with that, Linda, meaning like what I'm saying is in prior years, okay, let me give you a simple example. Let's just say that SURF only had $100,000 of cash, right? Then at the end of December, we get this bill that shows $50,000 that we owe some construction company. So then one way you could show it is you show 100,000 right here, and then show some AP balance of a credit balance of 50,000. Or another way is take the 100,000, knock it down by the AP balance and show 50,000 for cash. Meaning it mathematically comes out the same. It's actually a very conservative way of reflecting how much cash you kind of have to work with at the end of December when you take into account bills that are already in the system to be paid out. And the reason
we're talking a whole year back because the audit's so late.
No, we're not talking a whole year back. We're only talking about AP balances that are in there in like January, meaning like bills that relate to December that are literally on the docket to be paid out immediately in January. That's what we're talking about. And if you went back in time and looked at these balances and saw, hey, wait a minute, they're really close to the audited financial statements then. I can tell you this mathematically, the reason why that would be the case is because at the end of the year, they had very minimal AP invoices that came in for capital. That's why. It's just this year, we just so happen to have like $200 and some thousand worth of invoices on deck to be paid out that relate to capital.
In January of 2020?
Yeah.
That's what you're talking about.
No, what I'm saying is invoices that we take in post year end, if they have December dates on it, then they're going to be dated into the system because they relate to December. They relate to 2020. That's what you're looking at up here for. If you only focus on operations, $188,000 in AP, that means we had invoices. You could think about it. We had invoices that with December dates on it, so they're dated into December because that's when the expense hits in the period. So it's like we're matching up the expense with the period where it belongs.
I've got that, but I'm saying, you're saying that these expenses then, that this $187,901 was paid out in January of 2020.
That's right, yes.
Because we're now in January of 2021.
That's right, yeah. It's just, a balance sheet is a snapshot in time, you know.
I don't know. That's an awfully big difference from the auditors.
It's not, Linda, it's not a difference. Meaning what I'm saying is this is not, oh geez, $200 some thousand just evaporated into thin air. Like another way that it could be kind of shown is you could take this 188, you could take this cash amount, this 444 right here, and decrease it by 188. And then you're just saying, well, that's how much cash you're gonna have to work with because you have to pay these bills. Like the bills have already claimed that cash, so to speak. You could think about it like that. Meaning, so these amounts, and this is quite frankly, how you guys have always portrayed this in the past. It's a very, quite frankly, conservative way. It's a conservative way to portray it, but it's just showing this cash as decreased because the bill has already claimed that portion of the cash. So either decrease the cash and then show a credit for AP. Like if I split out AP with a credit, it would mathematically, the net assets would come out the same for capital.
I know, it just bothers me that we're looking at the top of this where you're talking about changing numbers as an operational expense. Oh, there's a big line there, and then there's capital, and it's like we're mixing and matching here, and I always thought that was a no-no. That's all I'm saying is when you're telling me you're decreasing my capital assets against operational expenses.
No, that's not what I'm doing. Because
that's what you just said.
No, that's not what I said. Because operations and capital are two totally different things. So another way I could show it is I could bump up these cash amounts here in capital, but then I need to put a capital AP amount down here that will be a negative balance. And even if I did that, the net capital assets would come out exactly the same. That's what I'm saying. It's just a different way of showing that.
Okay. Then I have another question. What created the 29,000 on page 36? What created the 29,241 overage in maintenance and landscaping? Just for the month of November?
For the month of November, okay.
Month of November, see that big 29,000. Oop, back page 35. Oop, forward a page.
Actually, what I'm doing is I'm turning to another page, which actually, just like I said, the teacher's edition, and this full set is actually online too, so the full financial statements. But if you were to turn to page, if you were to go to like the full, and this is actually good that you asked this question, Linda, because if anyone went to the link online under the finance heading, and the full version of the financial statements are on there. So if like, for example, on page 7, you see this maintenance and landscaping section. This shows the actual breakdowns of what's making, see that 29,241 difference right there under maintenance and landscaping? This shows you exactly what categories are triggering that. So raw materials, sand and gravel was almost 10,000 of it. Building repair and maintenance materials was almost 8,000 of it. Equipment repair and maintenance, almost 5,000 of it. That's what's triggering it.
I was just curious. It's a large overage.
Yeah, but then
you know? I thought maybe I can see part of it's weather response. There's like 7,000 there.
Yeah,
maybe
right.
you got sand and de-icer and stuff. But I didn't understand the building R&M mainly because, nobody's been doing very much.
Mhm.
So it's just curious of what it got spent on, that's all. And then you need the GL to break it down to figure out what's going on.
Yeah, precisely. And that's exactly correct. Then to look into this deeper building R&M, then you look in the GNL or the GL to see, what invoice is triggered, like that.
Yeah, that's all. It's just, when I see something like that, I'm always going to say something.
Yeah.
Always going to say something.
But I'm glad you brought that up, Linda, because I was going to mention that because the full financial statements are always available online under the finance webpage section, and it'll give you all of this detail. And then you could even scroll back into like, I'll just say this real fast. It'll only take me a second, but like, for example.
Yeah, because it's what department actually triggered it.
That's right. Yeah, you could look at, this net better or worse for the month. And you could actually go right to the ACC security department, and it breaks it out GL by GL line item. You could see the variances of what triggered that. And then you could actually look at any of those GL line items, like you said, Linda, and then look at the GL detail to see what actually made up that GL line item for it.
Yeah, and like I say, a lot of times it takes going down into the GL to see exactly, well, what the heck was this? The only other question I have is I noticed when I was looking through the October general ledger, I think it was, there were some prepaid golf memberships for 2021 in there, I think. Mm-hmm. Those aren't included in golf's numbers for 2020, are they?
You mean revenue-wise?
Yeah.
No, they're not. No.
Yeah, that's all I wondered if they were taken out.
Yeah.
Because I know it shows prepaid. There was a sizable amount of, relatively speaking, there was a decent amount of prepaid in there, and I just wanted to make sure that gets taken out, because then that gets booked into his January, I believe, still.
Yeah, that's correct. Yes.
Okay. That's all I have.
Okay. Anyone else have any questions?
Hey, Joel, I have a quick question.
Sure.
This is Joel. This isn't specific to this cash balance. I was just curious about on page 37, the transfer fees received. That's 0.25%. Is it safe then say that?
What number, Joel? What were you talking about?
Oh, sorry. Second line item in the transfer fees received.
Oh.
The 205,000 there.
Yeah.
So with every transaction, do we kind of by default on that? Is there Are there like outstanding balances when people buy, or does that just happen with every?
Sounds like you got muted. Or
Can you hear me?
I can hear you now. Yeah.
So does that money just come into us automatically with every housing purchase, or is there an outstanding balance we're waiting to receive?
Oh no. Yeah. This line item. This is like under capital reserve holding fund. This is where the amount that comes in, the 1/4 of 1% of every home sale that occurs in Sudden Valley that the buyer pays. And then when we get that money, it's dumped into this capital reserve holding fund account.
Right. So is there anything outstanding, anything so I don't know if I'm making sense.
Oh, you mean like invoices that we have to pay or something like that?
Money we're still waiting to come in on that, or is that kind of like, is it just settled whenever the house?
Yeah, that's right. Because the title company is the one who collects that fee, and then we get it from them. So this is solely dependent on number of home sales per month coming in.
Okay, and since it's 1/4 of 1%, is it pretty safe to say then the total like money flowing from home sales for the year is somewhere around like 100 million?
Well, I mean, this is as of the end of November, so we've taken in about $245,000 that we've taken in so far through November for the year.
Okay, so likely more than that, likely over 100 million is what I'm getting at.
Oh, you mean like selling price? That's what you're
Just
getting?
total money flowing. It's kind of nice to know the scale of what's going on.
Yeah. Let's see here. Hold on 1 second. So I mean, so according to this, like you could think of it, over $98 million worth of homes were sold in terms of like the actual selling price of each individual home if you added it all up.
Yeah.
Yeah.
All right, cool. I was just curious if that was a pretty accurate, if you multiply it up, if that was pretty accurate.
Yeah.
Okay, cool. Thank you, Joel.
Sure.
Do you have any other questions? All right. Well, we can continue moving forward. So next thing on the agenda is our committee reports. Looks like we have some minutes from ACC.
Minutes are posted from our last meeting online. For our next meeting, the submission date was today. And so if you want to have anything on our agenda for the next meeting, our submission date is for February 11th. And that's really all I have to say. Not much going on right now.
Sounds good. Thank you. Looks like the communications committee has some member approvals.
Yeah, so we have 2 members that have been vetted and are in good standing. And I move to have the board approve Liz Vidal and Ann Cope to the communications committee.
Any objections? So unanimous consent, those are approved. Moving on, do you have anything for document review, Justin? I know you guys haven't had a meeting yet, but.
Nope, nothing to report, and no new applications either.
Emergency Preparedness Committee.
We did not have a January meeting. We will have one for February.
Okay, sounds good. Finance Committee.
The Finance Committee met on January 20th, and basically you all had a recap of what we did. We had the presentation of the 2019 audit, and Joel covered the November financials for us. And so basically you all got to attend our meeting tonight, and that is it for finance.
All right. Moving forward, long range planning has a couple of committee member approvals.
Yes, I move to approve Stephen Aridi and Richard Johnson to the committee.
Do we have any objections?
I need a second, I think, right? No?
Yeah.
Second.
Thank you.
Any objections? All those in or unanimous consent, then those are approved. Anything from N&E, Linda?
We had our very first meeting in this year. We finalized our minutes from the last 2020, the last couple meetings. We set some goals for this year. I'll probably have something to bring forward at our first meeting in February as a discussion as it deals with online voting. We kind of talked about this last year. I think we're looking at once again hiring a third-party vendor. Nobody knows where this is going with vaccinations and COVID and everything else. And it just seemed really clean. Last year, there weren't any arguments about who voted, that they could see that there were people who were completely separate from Sudden Valley and an independent party. About the only thing that really will be critical for us to do is to find some people separate from the N&E committee to be N&E volunteers to help open the ballots and stuff. They hold their stuff all together. Like when they bring their ballots from California, their ballot, they're still sealed. And that's kind of what took so long the last time. And it's an easy thing to correct. But like I say, there's the whole thing about online voting that got brought up last year. And it's just a discussion I'd like to have with the board at some point. If they want to continue forward with that, it's at least going to be a 2-year process because you have some bylaw changes you need to make. But I'll discuss that in February.
Okay. I have a quick question, Linda. What sort of time frame do we need to be looking at from your committee for a recommendation as far as utilizing a third-party vendor again? I'm just trying to gauge that for my own planning purposes.
I think probably March. We're going to meet again and look at goals and stuff. I have some final information from Rachel that I got today about exactly what our costs were. The parliamentarian was way more expensive than she normally is because we found out when we met, and I think Andrew's still here. There are lots of things that were always on the on her script for the meetings, and the Zoom meeting changed everything. We started with it and went, wait a minute, can't say that. We had John with us because things were so different. We spent like a whole afternoon discussing it. She then had to go and rewrite it all, and we gathered again and went over everything. Just took a lot more time than it would, but if we have to do a Zoom meeting again for the AGM, we're all prepared, and we've got a lot of the changes implemented that just didn't work for having an in-person meeting.
Okay, thank you. All right, moving on, Parks Trails Committee.
Thanks. Yeah, I have a handful of members to approve. Real quick question though, renters can be on committees, correct? Or no?
I don't think so. I think they have to be members in good standing.
They have to be vettable.
I'd have to do more research on that, Andrew. I did see your email. I didn't get a chance to look into that yet.
No worries.
So-
Okay, I'll read off the homeowners that have been vetted.
Okay, that sounds good. We'll get that figured out for next meeting.
All right, just let me know. Looking to approve Rob G, Adam T, Jenny F, Allison C, Karen B, and Megan T.
We have a second.
Second.
Any objections? All right, unanimous consent, and we'll approve those. All right, so continuing on, we have no continuing business, so moving to new business. Going to read a quick statement and we'll move forward with the firearms policy. As some of you may or may not be aware, there have been questions regarding a few purchases made with Sudden Valley funds making their rounds throughout the community and on social media. It is accurate that a taser as well as a concealed carry firearms training class were purchased, and these were not done as it relates to our security contract with Pacific Security. The board is not intending to get into the specifics of these purchases at this time, but we feel it is necessary to make the statement that these purchases were not an appropriate use of Sudden Valley funds. These purchases were not done in compliance with existing Sudden Valley policies and are not in line with the values of our association. Sudden Valley policies are quite clear about what is considered a firearm and that firearms are not allowed on Sudden Valley property. The board would like to assure the community that the taser in question has been secured and it is being disposed of. The board is committed to a safe work environment at Sudden Valley. Therefore, I would like to make a motion that the board reaffirms the association's existing firearms policy as shown in our agenda packet and is currently posted on the Sudden Valley website.
Second.
Do we have any discussion? All right, so I will call the question. The motion on the table is that the board reaffirms the association's existing firearms policy as shown in our agenda packet and is currently posted on the Sudden Valley website. All those in favor? Any against? All right, and it passes unanimously. We will move on then to the Pacific Security contract, and I'll pass it over to Glenn to initiate that discussion.
All right, thank you. First, you'll notice that we have a district board of directors memo or agenda bill that'll become general practice when we do these things, pretty much for everything in the packet. I wanted to kind of highlight a few things. First of all, Pacific Security has been extremely flexible in negotiating the final details as well as extending the contract with the same 2020 rates until we could get this in front of you. So we definitely appreciate them working with us on this. I wanted to highlight a couple of the changes. You'll see in the first memo that they've given us the 2021 rates, which they're allowed to do per contract. And those are agreeable to us. The second is that you will notice that the armed security rates have been removed from the contract based on what you just reaffirmed, because that would violate our policy. It's also been made clear to them that they will be working with me directly unless I delegate that to someone else. And then the fourth thing to highlight is you will notice in the bottom of the contract, I think it's on page 3, that we have added that Pacific Security staff will follow all HOA policies while they're working for us. And again, that we wanted to make that clear for all policies, not just the ones we were talking about tonight. So staff and I recommend approval, but you also see in the agenda bill that I recommended that we evaluate the contract in 2021 with making any changes for the 2022 contract. So pending your approval, I will go about doing that process, starting that process. And I'm open for any questions.
Oh, I just have a comment.
So, well, one sec, Linda, let's
Okay.
put the motion on the table so we can then discuss it. So I guess I'll just read the motion then. I move to approve the contract for security services with Pacific Security through December 31st, 2021 at a total contract not to exceed amount of $200,000 and $200,346. Sorry, my brain is not working today. Good second.
I'll second.
All right. Any discussion? Start with Linda. You put your
I
hand
just
up.
had a couple of questions and I just noticed it now. Is in the letter to us, they said that the guard billing was $22.48, and this is pennies on the dollars, folks, is $22.48 an hour, but in the actual contract, it says it's only $22.43. So I'm assuming that's a type on their part.
Yeah.
And do we have a overall cost of what that would be to us then? I know what our budget is, but is this then within our budget?
It is. It's a little bit under, so it comes in at 190 something based on previous use. But that does, and that would, of course, if we had, there's a little bit of grace in case we want to use them for special events like the election last year and things like that. So.
Yeah, and there's times we also have additional security like the 4th of July.
Right. Yeah.
Okay, just checking. I didn't know if anywhere they'd given you a hard number or not, but anyway, that's all I have.
I'd just like to throw out, and then you can go, Joel. I appreciate the fact that we're going to look into the security contract over the next year or two to see, what we can do in that regard. If there's, other companies that can provide competitive services and stuff like that. It's always good to make sure we're putting those things out to the greater, commercial public so that we can make sure we're getting competitive prices. Joel, and then Steffi.
Sorry. Yeah. Just a question about timing. So we're discussing the contract ending end of December 2021, right?
Yeah.
Basically, yeah, we sign a yearly.
Okay. And normally when is it? I would expect the year-long contract to be signed prior to the beginning of the contract term.
Yeah. Normally it would be definitely happening in December. You would have all your annual contracts come in early December, but with things that were going on, it got delayed. And again, thanks to Pacific Security for just holding the line for us.
Cool. So my other question is just with and it seems like this is coming up again, but with the way that our the election is like beginning of November, contracts run January to January, it's sort of this weird gray area where it's a question of which board is going to focus on this, a board that's brand new beginning of November and try to figure this out by the end of December, or a board throughout the year. So it would be great to know, to set a precedent on when this discussion should happen and when we should get it figured out, so that if anything needs to be changed, we can bring it to the community to vote on it if it's a community issue.
I think that's a good suggestion, Joel. It is a kind of a serious thing to dive into for a brand new board. So working on trying to get even this isn't not even just this contract, but any contracts in general, December's not a great time for us as a board to be trying to do a bunch of work.
And
Absolutely.
it would be great to just know going into it that the precedent is the existing board going up to the end of the year is responsible for it. So it doesn't look like we ran into quite a few community members thought that things were getting dealt with last minute, like end of October, right before the election. And it looked like, oh, they're trying to take care of things. And I just want to avoid that kind of appearance and just like everybody knows who's responsible and that this is a planned thing and we're not trying to step on anyone else's toes.
And we can, I haven't looked at the purchasing policy yet, but we can certainly bring that before you and kind of make that an adopted thing based on how you would like to do it. So, and then put it in there so that we either bring the contracts early enough so it's not rushed, that take effect in December, or we decide to do it after, however you would like to do it. But I've written that down and we'll start to work on that for you.
Cool. Thanks, Glenn.
Mm-hmm.
Steffi, then Paula.
I was just going to say that it is, Joel touched on some of the things I was going to say. It is a source of contention for some residents. Of course, that might be getting cleared up. For instance, when they wanted to see the logs, it was a great big hullabaloo and would cost a lot of money in order to get the logs. I'm not clear on whether or not that's the case or what the actual case is, but just a breakdown for our community of this is what we get from them. Of course, we use them because they're in the bylaws. They could vote on that, but just sort of a value-based breakdown. This is what we're getting, and this is what we can get from them. If we wanted to pull reports, is that a problem? Et cetera, whatever people want to see. And then last year, the way the security was brought to us, like it was kind of like we were over a barrel. So I don't really like negotiating like that. I don't think anybody does. I like to think that I always negotiate a fair deal when I'm looking for anything, even if I'm purchasing, so it's like, I just really don't, we wouldn't do business with people who treated us like that. So it'll be interesting to see, in light of different staff and different personalities and different interactions, what comes up for that it will be important for the community to see, because they've been pretty vocal about that. So thanks for bringing that up, Joel.
Paula?
This isn't necessarily for tonight's discussion, but we may want to consider looking at running contracts based on a government style fiscal year rather than year to year, because we're always going to come up with this, because that's in our bylaws that we turn over the board in November. So it may be something to look at how we run contracts this year, is looking at a fiscal year instead.
Makes sense. All right, we'll have to dive into that. And I would just like to kind of say one thing, because we have gotten some emails from community members and stuff about security and their role and what they do for us, and what sort of weapons they may carry. As you can see from our previous agenda item, the board reaffirmed its firearms policy, which, includes not carrying tasers or pepper spray. So Glenn did outline that in his part of the discussion, but we have, adjusted the security contract to be in compliance with those policies. We have discussed with Pacific Securities Management the need for either of those things, and they do not see the need for the officers to carry those things. So I just wanted to point that out to the community, in that in light of some of the emails that we've gotten, I'm going to work with Glenn on putting together maybe a little security FAQ or something that we can put on our website to kind of outline what roles, security has, what roles the sheriff has, and any other entities that may be included in those types of services.
And we'll be sure to bring back you multiple options for you to consider. So we'll look at as many, 3 or 4 options on fiscal and how and timing and all that, and bring that back to you way before we get to November.
Okay, thank you. Linda?
Just a question. Do we have a binder of contracts? Because we have like the Linden Tribune, sorry, Brent. We have different leases and stuff and when they're up. And I wonder, I don't know, because it's been a while since I've had to deal with that. Do we have a list or a binder which has these contracts in them, which would have their end date? And you could simply make a spreadsheet of here are our contracts, here's when they expire, and make it available to any board member. And you just simply keep it updated every year, because you may take away or change a vendor, or you may add somebody, but that way the information would just be there for everybody rather than guessing, including the general manager.
Right. We have them all electronically. So I've started reviewing a number of them already. I totally agree with you. We'll put together a master list that has those key things. Time frame, amount, and what the company is. So kind of a table of contents of our contracts, but it gives the base information.
Yeah, that would
It will
just
definitely make it easier for us as staff to
and just anybody that's here for staff and
Absolutely.
for any boards moving forward, if it's something that's kept always current, if it's a living document.
And we will also add to that list who on staff is managing the contract. So everyone will know who to talk to about it.
Excellent.
That'd be helpful. Do we have any other discussion? All right, so we'll call the question then. The motion on the table was to approve the contract for security services with Pacific Security through December 31st, 2021 at a total contract not to exceed amount of $200,346. All those in favor? Any opposed? Like passes unanimously.
Thank you.
All right. So moving on to our next agenda item. Sudden Valley has 2 spots on local boards. There is the Lake Whatcom Joint Policy Group, which is a board that deals with the Lake Whatcom watershed and the Lake Whatcom Management Program, which is basically largely related to stormwater and phosphorus removal in the watershed. And we also have the Whatcom Council of Governments Board, which is basically a transportation board that deals with the local jurisdiction securing state federal funding for roadway projects. And so the 2 items today would be to appoint representatives to represent Sudden Valley in these two groups. The first one to discuss would be the Lake Whatcom Joint Policy Group. I don't know if there's any questions on the group. Linda?
Just, I know that Nancy Allenak, who's on N&E and who I know has spent a lot of time on that, basically on that group, when we were looking at all of the recent things in the recent year with people being charged a fee and stuff in the watershed. She's really followed that closely, just as an individual person, and she's volunteered to do this if the board is willing to appoint her.
Yeah, so Nancy did email the board. She saw the agenda and threw her hat in the ring. She did send an email kind of outlining why she believes that she would be a good fit for us to do that. I can kind of outline to the community, what she said to the board as, to be transparent. She, I think she's lived here since 2006. She was 30 years working as a geologist. She has 2 geology degrees and a professional licensure in it. She's been regularly attending the Lake Whatcom Policy Group meetings since 2013 when they started. And she's also been participating in the county council surface water workshop sessions that have also taken up a lot of the work that this Lake Whatcom Policy Group decides on. She's provided written and verbal technical input to the county and the city and these various groups. And she was also appointed by the county council to the Lake Whatcom Stormwater Utility Advisory Committee as a local citizen, and provided technical input into the Stewards of the Lake, a guide to living in the Lake Whatcom watershed pamphlet that was distributed to the residents. She's also an elected member of the N&E committee as well. And so that would kind of outline some of her qualifications, not to just throw her out there, but if the board was considering this, I do think it would be a good idea to be transparent to the community on why we would consider that. But yeah, just at this point, kind of looking for thoughts on that, or if people on the board are interested and would like to step up. Kim?
I'm not volunteering to step up. I'm just curious of what is our process for this, for nominating this volunteer. I appreciate Nancy being proactive, looking at the agenda and contacting us, but is this how it works? Is this the process, or do we open it up? Do we advertise in the e-blast? How does this normally work?
It's on the board to appoint that member. In the past, I think a lot of times it's been a board member. I think Larry in the past, not as a board member, has also done it as well. So it's basically the board's decision.
Do we have to advertise it in any way, or?
No, we don't have to advertise it in any way. There probably could be better outreach and understanding of the community on what, the position is for and does. But the Lake Whatcom Joint Policy Group basically provides policy recommendations to the county council and city council regarding protecting the Lake Whatcom watershed and reducing phosphorus, and those types of things.
Nancy sounds like a great candidate. I just feel like we should post it somewhere and give people, more folks from the community, the opportunity if they choose to apply for it.
Yeah, I think it's, like I said, typically it's been a board member doing it. I don't know the perfect process for, going about this. Every board has kind of handled it differently. They are up and running. They do have a meeting coming up shortly. So it would be good to get someone in there. It gives us a voice, the community a voice to be able to speak at these meetings. I clarified with Nancy, her willingness to provide, pre and post meeting reports to the board and stuff like that type of thing. Obviously we would need that. The community would want that. Nancy has been participating in that committee, which is also a pretty useful thing. Getting up to speed on a lot of that stuff is not going to be an easy task because it has been going on for, since 2013. Brian?
It seems like we all have a lot on our plate. And Nancy is a geologist, right? She's been involved with this, she's been involved with the committee, and yeah, I mean, I think she sounds like a good candidate for the position if a board member is not willing to do it.
Noel?
Nancy sounds like an excellent candidate for that position. Even if it's just to be a liaison between the county and us. I've been kind of involved with it slightly on the outskirts. I've also been contacted by Ryan O'Connor of the Lake Whatcom HIP coordinator. And it's always been something that I've been interested in and wanted to get involved in and bring to Sudden Valley. And so I think it'd be really helpful for her. And if we could also have her work with the ACC as well in those matters of the watershed issues. Sorry, I'm tired. That makes sense?
Any other thoughts? Josh and Andrew?
Andrew, you go ahead.
Okay. I agree with Kim. I do think we should open it up and see if we have any other community members who might be interested. I think Nancy would be great. I just agree with Kim that maybe open it up and see if there may be others, and we can collectively decide who we want.
Yeah.
Josh, then Steffi.
Oh, I'm good. Thanks, AJ.
Steffi?
Well, I was just gonna say that I would be in support of Nancy doing it just because I know her background, and it does sound like she is a great fit. Sorry. And then if we wanted to integrate anyone else into it, if anyone expressed interest, I think we should do that. We could open it, and we could put Nancy in right now as interim or as temporary or even as just for this session, and work on getting more people involved, I guess is the correct word to say, so that we have these committees and these boards, and we have more than just people we know or people who are reaching out to us. I think that is important, but just the fact that we're a bit in a bind, that's I don't want to be behind. I feel like we're behind on everything. Can I just say that? That's where I feel like I'm constantly trying to keep up, and I'd rather be proactive.
Okay. Josh?
I make a motion at this point.
Sure.
I move to nominate Nancy Alianak as the SVCA representative to the Lake Whatcom Joint Policy Group.
Second.
Oh.
All right. Any further discussion? I'll just say I do kind of echo what Steffi says. We can change that appointment at any point in time. We could have Nancy attend this on the board's behalf, basically I believe there's a meeting next week. Provide a report back to us, reconvene. I did not have a lot of time to get, everyone totally up to speed on this. And I'm still, trying to, learn the background of all of it too. And, I work for the county and have dealt with some of this stuff. So, I think we can go that route too, and work towards bringing some awareness to that and what that means, and you know, I mean, maybe it even becomes like an elected position or something for the association, or I don't know. That's just pie in the sky thought, but Justin?
Yeah, and to point out too and reiterate, she is she was elected last November to ACC. So
What?
Isn't she?
Enemy.
Or Enemy, sorry.
Huh?
Come on, Noel. Justin.
She was elected, yes, so to a position.
If she wants to be on the ACC.
I already got her for document reviews.
Josh?
Just one more comment. I think it's great that Nancy actually wrote the board and gave us her qualifications, and she's obviously in tune with what's going on with, that group. And I think we would be lucky to have her in that position. And I know she would give us all the deets and report back, and, I see it being a win-win.
Any other discussion? All right, we'll call the question then. The motion on the table was to appoint Nancy Alianak as the Sun Valley representative to the Lake Whatcom Joint Policy. All those in favor? All those opposed? All right. Kim opposed. Everyone else, I think, was in favor.
Only on process. I think she's very qualified. I just don't agree with the process. I think it's not fair that people see opportunities and they jump in and throw their name in the hat, but we don't properly or adequately advertise for these types of positions. So that's my stance. But I think she looks like a great opportunity. I would just like to open it up for more people.
All right, well, we'll work to bring some more awareness to that role. All right, so we have kind of the same process for the COG board, which is, so the Whatcom Council of Governments is the, not to get acronym crazy on you for my engineering world, but the RTPO is the Regional Transportation Planning Organization. And then they're also the MPO, I think, which is the Metropolitan Planning Organization. And basically a lot of the federal funding that gets allotted out to the state and to local jurisdictions all gets funneled to the state and then funneled through, in Whatcom County's case, it's the COG. Every jurisdiction handles it a little bit different. In rural and urban make a difference too. Basically Sun Valley is a non-voting board member of this. It's a means of basically being in the loop on larger transportation projects that are happening on a community-wide basis. This is kind of right up my alley. I was doing this last year. I'd be more than happy to do it again. If the board wanted, they're pretty quick meetings from my experience with going to the one. They get through things in about a half hour, something for us to strive for. Not sure we'll get there, but and I think both groups meet starting at 3, I believe, on a weekday, and they're all filled with city and county council members or executive branch elected officials, depending upon the jurisdiction. Are there any questions on the COG board? And Josh, then Steffi.
I was just going to motion to.
So was I.
All right, you go ahead, Steffi.
I would like to motion to elect Andrew Tischlitter to serve on the COG board. I can't say COG, sorry, it sounds weird.
Second.
All right, any discussion? Noel?
Mute. Oh.
Is this going to throw you over the edge as far as all your duties?
No, I don't think so. It's,
Okay.
you know, we're technically a non-voting member. There's a number of non-voting and voting members in the COG board. So it's largely just a observe and report kind of function for us. And, we can, if the board wants to support a regional transportation infrastructure project that, say, the city or Whatcom County or someone was doing or asking for funding on, we could, write a letter and provide, some support and supporting that for whatever it is worth to the local jurisdiction. I don't know, but that's kind of the role we have in that. And it's just a means of staying in kind of the loop on that larger transportation projects, which, for us is we're looking at Lake Whatcom Boulevard, Lake Louise projects, Alger Cane Lake, those types of things largely are what impact us, obviously, as a neighborhood.
Okay. Yeah, just as long as I just want to make sure that you're comfortable with it, you don't feel stretched too thin, and we weren't nominating you for something that.
I feel all right. Especially we're getting back up to full staffing here and stuff like that and everything, and moving forward in that regard. So, but if anyone else is interested, I'm completely happy allowing anyone else to participate too. So they move very quick. In the one meeting I went to, I was like, oh, okay, or well, we're done already. Like, holy crap, like that went fast.
Okay.
All right. Well, I guess any further discussion? Call the question then. The motion on the table is to approve AJ Tischletter as the Sun Valley representative to the Whatcom Council of Government. All those in favor? Any opposed? I think it passes unanimously. All right. So the last item on our open session agenda is strategic planning session. So last year we had talked about putting something together, and COVID derailed a lot of that. And so what I want to propose to the board is we have a lot of planning efforts to get underway. I know some of you have been on long range planning or are still on it. They're, in the process of building a comprehensive plan for the community. Survey was a big stepping point in moving that forward. And so the survey provides us some good data to move forward with and do some strategic planning and set some goals for the year and things like that. The long range planning committee has a pretty serious task undertaking that they're working on. And so my proposal is to have an initial strategic planning session with the board and with long range planning to allow us to set goals and to bring everyone up to speed on that process and that planning framework that we're going to utilize. It's very collaborative process that we want to have. We want to involve, other committees eventually as we start to build out these sections of our comp plan in long range planning. For example, we have a parks master plan, a trails master plan. The long range planning wouldn't spend the time, building or updating said master plan. We would ask the Parks and Recreation Committee to do that work in conjunction with staff, and bring it back to the committee, those types of things. It's imperative that the board and long range planning committee are on the same page. It's a lot of work to be done, and there's no reason to do the work if we're not all kind of moving in a cohesive pattern forward. I don't have a lot of details for you guys at the moment. My main goal with bringing this discussion up tonight was to gauge the opinion on having a process like this. I didn't want to waste either me or Glenn's time developing anything until I knew the board was wanting to move forward with something like this. I know Kim has brought it up before. Andrew brought it up last year. Long range planning, me and Brian and Steffi last year was on it, have talked about it. So I assumed there was fairly good support from the board on this, but I do wanted to just gauge that, maybe discuss some kind of timeframes, some things we don't need to get into too much tonight because we still have some other stuff to take care of in this agenda, and I don't want to keep you forever. But basically 2 quick things I would look to try to get a tour of our facilities for the board and for long range planning prior to this event taking place. So sometime in the next couple weeks, doing something like that. And we had previously discussed plans with that. We can discuss that via email and work with Glenn to get something put together in that regard. Timing of the first strategic planning meeting, and because there's so much to do, we don't have a current comp plan. That long range planning is just updating. We're building a new one, and the board has a lot of planning to do as well. At this point in time, we may need to have more than one. My initial thoughts would be to have one with long range planning to start and develop some goals on our strategic planning and our comp plan. We would work, the long range planning is finalizing up the survey results report so that we can get all of that in raw data to the board so that you guys can evaluate that before we go into these sessions. And I guess my thought would be maybe having at the end of February, utilizing the long range planning's committee meeting time as our first strategic planning session. It has to be a special meeting of the board is what I understand. It's not supposed to be in one of our regular meetings. It's also a pretty time intensive thing. It could be something that maybe we want to do on a weekend too, to provide us a larger chunk of time to get through. A lot of that first beginning portion would be goals, talking about goals for the board, for long range planning, for both of us combined, using those goals to help drive, a revision and update to our mission and vision statement, which can then be utilized to push the planning process forward. It's kind of the typical first step for strategic planning a lot of the times, is kind of establishing some goals and reevaluating or rewriting or revising your mission and vision statement accordingly. So that was a mouthful. I'll turn it over to any questions we may have, and then just, if people maybe just want to chime in whether they support that concept or not. Josh?
I support it. I mean, it was too bad we couldn't do anything last year, but I think it's great, and let's do it.
And another quick thing I thought of is, Glenn has said he's done these things before. We can look into bringing an outside facilitator as well. That would obviously cost us money. That's all stuff, me and Glenn would look into here and provide, kind of a proposed plan to the board on what we think would be the best, course of action forward in that regard.
And maybe that needs to be the first step.
Yeah, and that largely, like what I said, is just making sure the board supports moving on that step, because it is, going to take some effort, and I don't want to do it if the board doesn't support it. So.
Yeah, I think it sounds like a great idea, AJ.
I, of course, support collaborating with long-range planning as a former long-range planning committee member. And I think it's a good idea, especially on issues that the community was interested in with respect to the budget and finances. I think all of that needs to be wrapped together.
Okay. Are there any objections to moving forward with putting together a plan for the process then? All right, well, me and Glenn will get on that here as soon as possible. And first step, we'll figure out a tour facility for everyone, because regardless of this, I think that's important. That's something I also didn't ever end up doing last year because of COVID. So. All right, well, we will move forward on that, and we will circle back with the board. So at this point in time, do I have a motion to move into closed session?
Motion to move into closed session, or
Second.
All right, all those in favor? All right, we'll see you guys over there.
I need to do a reboot here, so I might be a minute or two.
Okay, sounds good. We'll wait.
Bye.
Did anybody text John?
No.
He's on here though.
Is he?
Yeah, I'm here.
Yeah.
Oh, okay. I thought he was eating his hamburger and french fry.
He might still be doing that, but he's.
Hope you got the sweet potato fries.
Boomers doesn't offer, I work right next there. So you don't get the sweet potato fries during the month of the cheap burgers because they take too long to cook. So that's the only downside.
Oh.
You have to get the waffle fries. Wah, wah, wah.
Waffle fries are amazing.
Yeah, you say that as if that's a
Sorry, but after you
Problem.
have a sweet potato fry, the waffle fries just don't hold a candle to them.
No, the sweet potato fries are way better.
Waffle fries are awesome.
It sounds too healthy.
Awesome.
It sounds too
It's not.
healthy.
It's deep fried.
Yeah, really, it's deep fried. It's bad. It's good bad.
I think that's blasphemy, Kim. There's no way it's sweet potato fries better than a waffle fry.
AJ, I'm going to have you and your family over at my house for sweet potato fries, and I will make you change your mind.
Don't do it, AJ.
A long time ago,
I'm not caving on that one.
there was a
I think we should
restaurant-
see if members have any comments on this. Open this up.
The whole
We'll put out a survey. Sweet
Let's
potato
do a sweet
fries.
potato waffle fries
We can even
debate.
throw JoJo in there just to really mix it up.
Oh, then the JoJos are
I
going to
love
take
JoJo's.
it. I don't think anybody's going to not take the JoJos.
We got
right,
everyone
guys, let's wrap
back
this up.
yet?
Do I make a motion to move back into open session?
We're waiting on Brian still.
Oh.
You know where John went for food. Where did John go for food?
just we had a couple pieces of round table.
Oh, yum.
I miss
Get
Round
good
Table.
pizza.
They have the best pizza. It's expensive, but it's worth it.
Yeah,
Like good spicy
Bellingham pizza.
pepperoni.
Bellingham pizza is expensive.
it's all relative.
Hey, starting Monday, restaurants
All right,
can be
now we
open
got
again.
Brian.
Oh,
All right,
I'll second Steffi's motion.
let's do this.
10:29.
Motion to move back into closed session or open session.
Second.
10:29.
All right, all in
10:29.
favor? All right, the board will be taking no action as a result of closed session. So moving on to property owner comments.
Yeah, property owners' comments. Most of our crowd has decided to call it a night. We do still have one attendee. Not sure if she'd like to chime in.
She's the diehards community member out there.
Who is?
Oh, it's
Ann.
Ann. Oh, Ann's coming.
Oh,
Here we go. All right, let's
She
bring
just
Ann
wants
on
to
over.
make us wait a little longer.
All right, Ann, I brought you into the meeting.
Hi, everybody. I just wanted to say that no, I really don't have anything to say.
Well, thanks for coming and telling us that you have nothing to say.
so are you just in the next room?
No, I'm on a different floor.
Oh, okay.
Are you down in the sauna?
The storage sauna, Linda. The storage.
Oh,
Sauna?
okay.
It's going to be a real sauna again soon.
Someday I'll have to tell you what some people that used to rent that place used to use that sauna for.
Oh, don't tell me. Don't
We've
tell
heard the
me. I
stories.
don't want to know. That place should be burned if that's what they were using it for. It should just be burned.
Good night,
No.
everybody.
Good
Welcome.
night.
Night,
All
Ann.
Right, Ann.
All right, motion to adjourn. Who's got it?
Motion to adjourn.
Adjourn.
Second.
All right.
Good night,
Everyone have a
everyone.
good
Thank you.
night.
Thanks, everybody.
Night, everyone.
Thank you, Glenn. Thank you, John.
10:31.
Good night, John.
Thanks